So the AI war is starting to ramp up. It's starting to strain the US economy like never before. There's simply no way to wage this war and go pedal to the metal forever. Understand the impossible situation of trying to build endless fields of data centers with NVIDIA chips. The US is not a low cost manufacturing destination, it's the exact opposite. Because of the tariffs, now everything from the copper wiring to the steel frames costs 20 to 30% more. And that means a whole lot of money is needed to build this field of dreams. Well, eventually, even Wall Street is terrified now. This AI bubble could take down the entire US economy, and it all has to do with the money supply or credit suddenly freezing up. According to JPM, our biggest concern is that a flood of data center financing could cause supply indigestion, particularly in dollars. Big tech companies are issuing too many bonds to borrow money. 2025's issuance is simply out of this world at nearly $240 billion. It's double that of last year. It's even higher than after the pandemic when things needed rebuilding. Here's the problem. By 2028, tech firms are expected to borrow over 1.5 trillion, and that is just for AI alone, all for the data center capex build out. And this introduces a type of two-body problem. On one hand, you have big tech sucking up all of the world's capital, and this turns it into an unstable bubble. Meanwhile, real industries and sectors are deprived of money. They are contracting. So we have a big manufacturing base that is contracting at the same time. And we have no idea which will sink the economy first because these two entities also affect each other. If Main Street loses their jobs, how will big tech get revenue to sustain all the debt payments? What's worse are the results of using AI itself in the US. Now, MIT did a study about the use of generative AI in corporate projects. Many companies were investigating it, but only a fraction did a pilot. And the amount of successful implementation is just shocking. Only 5% saw return or some amount of success. The other 95% was wasted effort or just outright failure. And this brings into question how sustainable these investments truly are. Now, we are not saying AI won't revolutionize the world. I believe it's going to change everything and will obviously be bigger than the internet. But the problem is the level of hype being sold by Jensen Huang, especially him. He's telling everyone the obvious but refuses to address the concerns about the bubble head on.
So you're saying no, this is not a bubble?
I think we're well in the beginning of the build out of intelligence. And the fact of the matter is most people still don't use AI today. And someday, in the near future, almost everything we do, every moment of the day, you're going to be engaging AI somehow. And so between where we are today, where the usage is quite low, to where we will be someday, where the usage is basically continuous, that build out is.
Here's the issue. Investors, especially those on Wall Street, they are hungry for return. The more AI investments don't return a good investment, they know what it means. Less business to all these hyperscalers and other borrowers, and that could cascade to defaults on bond payments, and suddenly the creditors they get screwed. Now, this is not fear mongering. This is simply how credit borrowing works in capital markets. Just look at the traders. Just look what traders are doing to one of these hyperscalers, Oracle. Now, the company is taking on tens of billions in debt financing for their AI build-out. Well, the market is betting against that. A huge amount, $4.2 billion worth of bets, are entering Oracle's credit default swaps. In other words, traders are betting Oracle will default and they stand to profit from the crash. If AI revenues are so guaranteed or solid, these traders wouldn't make such a bet. Meanwhile, we have experts telling us that credit spreads will widen above 100 basis points from 75 this year, meaning companies in the US will have to pay much higher to borrow money versus the treasury than before. The US government itself is already a big competitor for capital flows, and now you throw in all these tech bros. How much can Main Street borrow? It's going to cost a bomb, it's going to cost an arm and a leg. And if you thought 2025 was bad, just wait till we hit 2026, and that's when things could really hit the fan. The fallout could literally freeze US credit markets. Not good for an economy literally running on deficit spending like no tomorrow. In 2026, just 4 of the Max 7 will be spending over $400 billion on AI. A huge amount of this will be debt financing. That's why Trump is so desperate to get interest rates down. So the motivation to arm twist the Fed to cut is for the AI bubble, to allow these companies to borrow money as cheaply as possible to build more data centers. Now, just building the structure alone isn't enough. There's still the power grid to consider. And weirdly enough, is there enough water flowing to cool these data centers? We all tend to forget about the simple stuff. A lot of US data centers are literally built out in the middle of nowhere. Now, sure, a big reason is to escape big taxes and to locate near energy sources. But you are introducing another problem. When you build data centers in places like Texas, where's the water? You need vast volumes of water to cool and operate them. In fact, two-thirds of data centers are in locations with water stress, might be actually over 70%. It's as ridiculous as TSMC building their chip plant in the Arizona desert. You might as well build them on the moon. And that's why the cost for all these data centers will only escalate. It's not just buying the chips and constructing these buildings. There's also all the other infrastructure and ancillary costs you must factor in. Here's another point to consider. Most of these hyperscalers have either AA or AAA credit ratings, so they can borrow cheaper capital. Main Street doesn't. When the supply of credit drops, suddenly the price of money goes up. And what is the price of money? The price of money is interest on the loan. We could have a repeat of the disaster in '08 when credit markets truly froze. The Treasury was borrowing money at 2.4% then, while triple B rated companies were borrowing at over 10%. That's 4 times the borrowing rate. Ladies and gents, not only do we have Besson borrowing money like no tomorrow, now we have the tech bros in Silicon Valley doing the same BS as well. I don't know about you, but the ending of this story could be really nasty. Well, I think Trump also knows things are coming to a head. So there's now this big scramble in Washington for money. And where's the money supposed to come from? Well, Trump wants it to come from China. But he keeps telling us that the Chinese economy is collapsing. But now they still have the money. According to Lutnick, Trump is now weighing advanced Nvidia chip sales to China. Now suddenly it's fine to sell the H200 chips to Beijing. That is a stronger version of the previously allowed variants. Suddenly national security is less important than economic expansion. And let me translate this for you. We need Chinese money to keep the bubble growing, because if it doesn't, then the entire market could collapse on itself. That is the real national security. This followed what was a call between Trump and China. In fact, Trump has agreed to visit China. Even the US is running to China now for trade after tariffing the hell out of Chinese companies. Make it make sense. We are in an upside down world, guys. One can expect Trump to raise the issue of Chinese lifting their ban on US chips. This is probably on par with the rare earths issue, which still isn't settled yet. Now, Lutnick finally figured out the double bind the US is in. Do you want to sell China some chips and keep them using our tech and tech stack? Or do you say to them, look, we are not going to sell you our best chips? By not selling advanced gear to China, you will simply force them to innovate. Huawei will start making even more powerful Ascend chips. You also cut away revenue to companies like Nvidia and AMD. But if you let China buy the chips, they will probably do this. The Chinese will probably stockpile a bunch of the H200s while still accelerating their own chip advancement. It's not going to stop. You might be able to slow them down a tad bit, but you can't stop progress. And it seems that Trump is leaning towards this outcome. The AI bubble has gone out of hand and there's no cutting away Chinese revenues. Trump needs Chinese money to build data centers for stronger AI to counter China. It's essentially this. It's hilarious and sad at the same time. US spending on AI now exceeds half of all investments. This is on an aggregate level. It means the entire US economy is betting on AI to win. And that success hinges on two things: Rare earth supplies to the US must not stop. If they do, good luck making all the AI chips and semiconductors. Corporate revenue must not drop as well, or we'll get into dangerous levels of capex overcommitment. Now, crudely speaking, the US is over a barrel at this point of time, and that's why the global hegemon is surprisingly compliant with China today. It's not a coincidence, folks. People in Washington and Beijing, they know this. I'm just making it a little simpler for everyone to understand. Behind all the smiles and all the handshaking, it's all about leverage. Almost immediately, we have Nvidia stock rising and erasing the losses. It is up 2.5% on the day simply because of this news that the US and China, their relationship might be warming up. Now, firstly, China has banned US chips from entering state sponsored data centers, which I would reckon most are at this point of time. This will be a really big ask, and I'm not sure if Beijing will roll this one back. But we'll probably see a flood of H200 chips entering China as stockpiles. It's because the gap in performance is just too great to ignore, and who knows when US sanctions will reverse yet again. By selling China the H200 chips, the US will be indeed removing a short term bottleneck for China. They will be diluting their edge for immediate money. The H200 chip is 8 times more powerful than the H20. It has more processing performance and its memory bandwidth is also greater. Trump might be getting revenue, he might also be slowing down Chinese chip innovation, but he might actually be helping Chinese AI progress in the meantime. There's simply no scenario where it's a clear win for the US without big drawbacks happening. If DeepSeek was created using underpowered US chips, imagine the next variant with the H200 chips being supplied. China could very well surpass even ChatGPT using software workarounds plus high powered US chips. It's going to be a nightmare for people in Silicon Valley. The fourth most powerful AI model today, in terms of raw intelligence, is from China. The Kimi K2 was developed under a Chinese ecosystem where they didn't have the most powerful chips yet. This is like Tony Stark making the Iron Man suit in a cave. Not as crazy as that, but you get the idea, you get my drift. Imagine what happens next if China gets the H200. They will probably build a time machine with that. So these are just two parts of the story. Just because the US sells AI chips to China doesn't mean the AI bubble is safe and will pop. We could start to see even more powerful Chinese solutions and AI chatbots appear. That will compete with global market share and with the US and push prices down. So it's another type of revenue squeeze. Things are not as straightforward as Trump or Lutnick thinks. But let me know what you think. Will the AI credit bubble implode? And will China really buy US chips? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.